Hello guys, glad to have you on board again. Today we're going to talk a lot about two big sectors still going the same each and every day. We're going to talk about the cryptocurrency sector, trying to figure out some way to get the support area. We've been breaking lower again during the night and waking up this morning with some kind of pullbacks on the altcoins. That are struggling right now to restore some positive numbers. But that could be a potential bullish signal at the moment. We'll see about that. Bitcoin has been breaking to the lower level I was expecting, so we've been going straight forward in there. Momentums are divergent. We have signs of potential bullish reactivation to come nearby. So it requires still a lot of patience. We're far from going into validation on those trades. It's still working around the speculative area, trying to figure out if there are some other bulls like I think there should be. But it's kind of a wait-and-see approach right now. It's like the bulls are trying to test the market, see when we'll all be ready to buy. And I think that we might expect something like a brutal bullish reactivation. Not necessarily going to be the case into the Bitcoin scenario, because the Bitcoin recently has been lagging a lot in terms of price structure. We've got altcoins who've been yet struggling indeed, but they are showing some more strength at the actual current prices, which leads me to believe that the scenario I've been talking about with you in the previous days might be about to take place. It's just that, as I am speculating, I don't really know what the perfect and actual real timing will be. Now I think we have another shot about that that just happened during the night. By heading into the lower levels, of course I was asleep, which means I wasn't able to take those prices, but I've been managing my risks pretty well, as I've been putting my stop losses below those levels. Haven't been reached out to, so I'm still in, patiently waiting to see the bullish reversal to get into confirmations and putting some more money in. At the current time, I'm still patiently waiting to get those confirmations, which means I remain speculative, don't put too much money in there, obviously no leverage, and just being patiently waiting. Okay, so now that we've just talked about it, we're in the blue area. So we've been missing the perfect scenario in which generally the ranges when we're bullish should get reactivation into the blue area. But the fact that we've just gone lower isn't necessarily a bad signal. We just went lower to test another support. Might be the last one, because there is no other support at lower prices, which means we're kind of in the late stage scenario in here. If we are getting lower in terms of Bitcoin, might be a dangerous area in there. So at some point, true invalidation might be needing to trigger if for some reasons we were to go lower and install multiple candle closes. So we're still on the edges of that scenario regarding the Bitcoin, but as I said, I don't think that what's at play right now is in terms of Bitcoin. I think altcoins are driving the market right now, and these are the ones that we need to figure out what's going on in there. So I don't think Bitcoin is nearly close to being the driver in here. It's more likely being the passenger, and the driver of the altcoins trying to figure out who is going to survive, who is going to surrender to the pressure, to the pressure, and we'll see about that. All I see is that all the altcoins and Bitcoins are working really interesting key support area, and that so far these are holding. So it's pretty much too close and too early to say that this is a won battle. It's still ongoing at the current times, and we'll see about it. But the price action we have on multiple altcoins suggests that the game might be about to terminate. We've got this on Ethereum. We've been trying to break down, but we haven't filled the support, and that's really important in here. The fact that we've been there trying to trigger the stop losses, but didn't reach out to the support before failing and reintegrated the previous support area. So I think this is the excessive market breakdown that I was forecasting. The market tried to break down, but basically we found some strong bullish in here. We've got the volume that I've been picking up. Have a look at this. Okay, I was kind of missing that volume, and I thought back then that buying in here speculatively would be just smart to do before having a bullish burst with volume. Actually we didn't, which means instead of just bursting to the bullish side, we've just been triggering some stop losses instead. But as you can see, volume has been triggering in here, and we failed to get to the support, which means those who have triggered those stop losses have been buying them as well. So I think we're nearly probably at the end, but once again, doesn't mean I'm right. All I say is that right now, if we had to break that support and install candle closures below that price, this is where the nasty pot might be a play. I think this is absolutely an excessive market, but at that point, that means the buyers have an opportunity to take over. If they're not taking it over, it means that we have no buyer, and if we had to go lower, at some point, I think I'll be close to trigger invalidations. But something really odd has been happening since the latest 24 hours. I mean, something is really going wrong with the entire market. We're going to talk about this later on when we're going to cover up the other asset classes. But right now in the cryptocurrency, I think we've had an excessive market that is about to just get to buying. So we'll see about that. I could be right, I could be wrong. Once again, speculating right now, I don't know. But I think the altcoin scenario has been pretty far close to invalidation, which means I got two options right now. It's either we're going to lower and I'll have to trigger invalidation at some point, or we've been too far away, not breaking the supports, not managing to find a bearish trend, and at some point we're going to reactivate. So we're going to have a look not at the individual things, but as you can see, all the assets have been doing something like that. If you're having a look at Ripple, it's been triple bottom on the exact same price in here. Once again, something that at any time, if we break a resistance, it's going to go nasty. So I'm still holding Ripple as well. I have tiny leverages, which gives me the room to get. Obviously, I hadn't. I had no stops into IOTA, and this one just collapsed during the night before recovering the gains pretty early. So I think once again, this shows strength of those assets. They've been collapsing and surrendering the gains, surrendering the losses instantly, almost instantly. So it was basically triggering stop losses of dumb traders who've been putting too much leverage, and smart money just bought them out. So I think right now we have what might be a bottom. We've been bottoming into a support in here on IOTA. To me, sounds good. I mean, now altcoins have been under pressure. They're not just falling apart. They're just getting to really interesting prices, and I see investors buying those prices. So we'll see about that. We need to break resistances to make sure that the scenarios are validated, but that's basically what I expect to forecast in the next following days. And maybe eventually just from today or even tomorrow, I think we could have some bullish breakup. So we'll see about that. Obviously, if we have to go down to the prices we've been testing during the night, I think danger will be really down the road. So right now my invalidations are set below those levels. I really don't want to see the prices going there again. Could be the case for Ripple. I think Ripple is the latest one that could trigger some kind of risk assessment, stop triggering. Once again, just as we've done this night with IOTA, Ripple can clearly make a minus 10% drop in a sharp, brutal scenario. So once again, I've been buying those with no leverage, which means I'm okay with that. Just losing 10% on an overnight session is nothing I care about if we just recover those losses a few hours later on, just like the IOTA has been doing. So no stop losses right now is not a big problem to me, as I haven't been using nothing close to a leverage position in here. I've been buying with the real euros, and I don't think those markets are about to collapse to zero. They can lose 10% in a very brutal move, and I don't want to be caught in this. So it's nothing close to a buy and hold scenario in here. It's just that the market is nervous, wants to trigger stop losses, and I'm nothing close to let him go, to let him do it. I don't want to be the loser in here. I just want to be the gainer, and I think the gainer needs to be patiently waiting, don't put leverage, to be able to assess and absorb the short-term volatility. And that's the posture I'm having right now. It's just basically waiting to have those markets finding that damn bottom to confirm those trades and getting into eventually reinforcing those trades. Okay, so right now it's kind of a wait-and-see approach, not putting any kind of stop losses, unless when I see big dangers, overnight dangers. So as you can see, Ethereum, I have some volume in there. I have very negligible volume into Ripple and IOTA, which means I'm trading those two without stop losses. I'm not giving my stops to the market. That's how it is. I'm trading those without stop losses just because I have no leverage. But I don't want to say to the market, okay, this is where you're going to take my money. That's not how it works. I mean, when I speculate, I don't put stop losses. I have invalidation levels, and so far they haven't been triggered. All right, so it's watching closely to what we're having right now, and I want to see all those markets that have been making excessive drop downs during the night. I want to see them recovering and getting into breaking resistances. So now that we've went down lower, I want to see some resistance falling apart. Same thing goes for the global market. I mean, the gold has been breaking down, finding a support, double bullish signal in here. I don't know why, damn, momentum hasn't been triggering, but right here, to be clear, once again, trade line is very, very low. That bearish trend has been ongoing for pretty long. I think we're nearly reaching the end. Can be another additional bearish move forthcoming, just going slightly lower, but I don't see the gold market falling apart like it should. So if we were bearish, we would just fall apart. It's nothing close to this. We have been triggering some stop losses, but as you can see, buyers are supporting that price anyway. So the stop loss that have been triggered are bought by some other people that are just buying gold right now. So we'll see about that, but I think that's about time to get a little bit more aggressive regarding the assets, which means anytime we're going to get back to resistances, I'll be a little bit more violent in terms of positioning in here. I think we're nearly about to invalidate that fucking trend that's been ongoing for way too long into something that is nothing close to a normal pricing. So this is something that will obviously reverse to the mean, and I think after reversing to the mean, we'll get to install a bullish trend because we've been not breaking the supports. If I look at this in a weekly perspective, you'll see much clearly what I have in mind. I mean, if this is reversing bullish, is something that is obviously going to break that resistance. It's not that because we failed 2 times below that price that we're going to do it a 3rd time. I think, to me, the next time is probably going to go there, creating some kind of pullback, and then we're going to break it up. So to me, gold remains bullish no matter what. No matter Wall Street's trying to make you think that you shouldn't put your money into safe haven, and that the safe haven is the dollar and buying damn fucking expensive stocks. I don't believe it a single second. I mean, Wall Street is trying to sell you very expensive shit, but this is nothing close to what I intend to do. I think they've been trying to sell gold to force people into equities. But the more we get into that trend, the more expensive this becomes, and the more risky it is for people to buy stocks and not buying gold. At some point, this is going to reverse, and people will just say, okay, actually gold might be the best investment right now. For a short term, not a short term, but for a near-term perspective, buying gold is probably the best choice. Not on a long-term perspective. As I said, gold is probably going to be bearish in the end, but first we're going to have to break that resistance, which means if you want to sell gold, this is at least where you want to do, which is $1,450. This is where you can eventually try to sell gold, and I think we could eventually just get there, which is much, much higher. And if you're trying to sell gold right now, you might be facing great danger down the road. So buying gold, once again, is a speculative scenario. As a speculator, I don't care about what the price is actually doing. What I'm trying to get is what the price is about to do next to get the biggest gains out of trading. And if the price is just falling, I just don't give a shit. All I care about what's the next move is. And to me, regarding gold, the next move is first returning to the mean before breaking it up, which means I'm still trying to buy this, even though Wall Street's trying to sell it as hard as it can. And I think selling Wall Street's the most rational choice, even though they're trying to push higher and higher forever and making you thinking that this will go up forever. The next move to me is bearish in Wall Street, bullish in gold, bullish in VIX, bearish in the junk bonds and all the riskier assets. And I've been making an analysis yesterday regarding this. I think you guys have been coming across this. It's what I call the danger quadrant, in which we've got all the riskier assets showing signs of demand. And whenever you see this, why the fuck do you want to buy stocks when the risks is in pure red area? We've been selling junk bonds. I mean, look at this. Junk bonds, as I told you right below, junk bonds are extreme grade thermometer. Bullish stocks confidence should play along a bullish junk bond index dynamic, but we don't. Worse than that, if bonds are sold means danger on corporate credit, which means medium to short term to short sides corporate are in danger of credit default, which means we're putting pressure on those assets, and that's nothing good. I mean, if the big assets like Apple and things like that are just buying, okay, that's good. They can do it to get to $1 billion, to making the first $1 trillion market cap. I mean, what the hell? It's just there to try buying the stupid traders. But anyway, if they're getting in, the market is not going to be bullish either way. It's just if stupid guys are getting into buying expensive priced assets, we're just going to create bubbles, and bubbles always end the same. So there's nothing to buy actually right now. It's just either the market cannot find out its way to create bubbles and we're going to fall apart and correct the pricings and just get to retrace first before eventually getting slowly into recession kind of trades, or we just keep on going and creating nasty bubbles. But anyway, those bubbles will burst and the end will remain the same. We'll have to go down. It's no timing to get into buying assets right now. It's the time to secure the gains, lock the gains. You can put stop losses below the level, below the supports if you want to play it that way. This is what Wall Street's actually doing right now. And look at yesterday's session. Sorry, this is not what I want to say. Okay, just what was yesterday's pricing in the session? Look at Wall Street. We're going to take the NASDAQ because I think this is really, really where the game's at play right now and where Wall Street's trying to figure out this. So, first thing first, we've been breaking supports. We've been going down into 5 waves, 1, 2, 3, 4, 5, and now we're moving 2 waves upward. So everyone thinks this is bullish. To me, this is just purely bearish, and I think we're just pullbacking. And anytime we remain below this price, to me, it's bearish. So bulls have to get there. You got the objective. If you want to take my stop losses, go there. If you go there, I'll surrender, no problem. If you go there and if you fail, I'm going to double you down, which means I'm going to get into leverage trading. So I'm just trying to figure out what Wall Street's doing right now. Is it really trapping the bears, or is it obviously getting some pullback to get the bears to show at very interesting prices? And I think that the second option is the right one. What we've been doing yesterday is nothing close to triggering the bubble. We've just pushed price to resistances where the bears are likely to get in. And we'll see if bears are getting in, means that bears are in control and no longer the bulls. If volume is showing up to the bear side, nasty things will come and we're going to short that market top. Option number 2, bears don't show up in here. We break the resistances and then we will be about to trigger some nasty bubble trading. And I think the asset that is clearly reflecting this is obviously the NASDAQ, but this is just all at play right now with Apple. Look at Apple. What you have in here is breaking a resistance with a bullish gap, even though the numbers are not great. I mean, just to set fucking things straight, Apple has been selling less iPhone, which means in the long-term perspective, this is not good. This is the first time ever they are selling less iPhones than the previous quarter, and this is not a good sign. Really not a good sign, because Apple is not something that has been diversifying. Their money management is set around iPhone forever. So now that they're losing the numbers, everyone thinks this is good because they have a lot of cash and they can make share buybacks and whatever short-term shit you're talking about. But you cannot forecast 12 to 24 month ahead profits and say, okay, this is still pretty cheap to buy Apple right now, as if we extend the current profits to 24 months, then we're going to get those returns, which means we can price higher. I mean, what the fuck? If numbers are suggesting the pricings are short-terming, how the hell can you forecast 24 months ahead? We don't even know what's about to come in the next quarter. So don't play this and don't be dumb enough to get the numbers that Wall Street are trying to sell you and making you thinking that this is cheap and that this can be bought right now at interesting prices because it will be pricing higher later. No, it probably won't be the case until we create some nasty bubble trading. But bubble trading is trading aside of fundamentals, which means really short-term perspective. But at some point, the long-term perspective plays back in and the price collapse. So all we can do right now is just going down into Apple or creating bubbles. So it's a binary choice. I don't know what the market will pick. All I know is that bubble will have disastrous consequences, but we can still choose to do it. I'm not the one who chooses for the market. But all I can say is that I don't want to be part of it, so I'm not going to buy Apple, and if for some reasons this was about to trigger a bubble market, I'll just give away my stop losses. You will win that battle, but I'll win the war anyway. I mean, you can create a bubble, I'll just let it go for a few months, just get back in later on to trigger a crash. That wouldn't be the same scenario. It's just two different scenarios. I think right now Apple is about to just retrace. I mean, correcting, for example, 40 to 50% losses in terms of pricings. I've been putting logs, as you can see, so it's just to try and figure out if people are creating asset bubble or not. And as you can see, regarding the log, we're not nearly close to a trend, so I don't really think that this is creating the components necessary to create a bubble. I don't think Apple is nearly about to make a bubble. I think Apple is just messing around, trying to price higher as they can before just surrendering the gains and go lower. So this is why I've been putting the log. So this is what we have, but we could very well have another bearish next week. Very, very bearish. If for some reasons the Nasdaq is breaking down supports, Apple will collapse. And then we'll totally erase previous week's candle. So this is great, this is bullish, but this is obviously requiring the price to hold there. And I don't think that we're about to do it. I think we're about to just reject those prices as the Nasdaq will go down. The sellers will be at play. And if that's the case, then whoever bought the market top is going to be into troubles, because we're not going to get to those prices until years. And I don't talk about 1 to 2 years. I'm talking about 5 to 6 years before getting in there back. Okay? So if you're buying Apple, be really, really, really cautious, because if you have a look at this is not something you want to buy. Okay? In a 2-hour chart perspective, we're trying to install candle closes above the market top. We're trying to install the bubble. But this is clearly a binary situation. Either we keep on going up today and the Nasdaq will break up the highs. I'll give my losses to the market, but we'll have to create nasty bubble trading. The end will remain the same, which means if we create bullish stupidness and euphoria in that market, we'll create panic afterwards, which means instead of a clean market correction, we'll have a crash on Apple. Okay, and as I said, bubbles are just extended trendy moves, just as crashes are extended corrective moves. So if we get into bubbles instead of trend, we're going to get into crashes instead of corrections. But either way, we're going to go down. It's a certainty. It's just a matter of time. We have a timing right now. If this timing is failing, then I'll get to the next timing, but the scenario will change. It's rational correction right now, normal price correction, something that we already know, or crashing correction. It's just either way we're gonna divide the prices by 2, but in a crashing scenario we'll go higher first, but we'll go lower in the end. So just to be clear, if we're selling right here, I think buying Apple between $120 to $100 is interesting into the long-term views, because this remains a great company. They're doing great things. They're not gonna. It's just that buying the current prices is nonsense. This is where you want to buy and hold on Apple. So it's either you do nothing and wait for those prices after a clean correction in an ABC structure. Option number 2, we get to create fucking bubbles, but in that case, I think I'm not buying until we get to $80, which is pretty much different. Instead of 100, I'm going to buy 80, and if we go there, that means we're going to divide the price by 75%, and that's nothing abnormal. When you do create crashes, this is generally what we have. It's minus 60 to minus 70 to 80%. And that's normal. And I wouldn't be surprised. I mean, if Apple is going those crazy pricings, I'll just let it go. I mean, if DOMs are ready to trade $250 on Apple, I'll just let them do it. But anytime they're going to fail breaking new highs, I'm going to get in and I'm going to take the money. It's just I'm taking the money in the next following days or weeks, or I'm going to take it in the next following month, but either way, I'm going to take the money. It's just patient guys will get the money. Stupid short-term traders will lose. That's as it has always been, and it's not going to change tomorrow. So trade smart. Don't make the stupid decision right now. Don't get into FOMO trading and following the trends and things like that. We're nothing close to trending. All we can do in here is just bubble creating, and this is not something that ends well. You took the lesson with the Bitcoin. Please don't make the same mistake again. Show me that you've listened. Show me that you've learned from the mistake you've made previously. Show me that you're now better traders than you were back then with the Bitcoin. Now, that being said, this is the same music. You know about that. I'm just going to take a few questions and moving on, because we're going to have the NFP showing up in less than 10 minutes. And this is going to be today's market catalyst. Probably going to get to fall apart the equities, even though this is a good or bad number. I think this is where the bears will get in and take the limited liquidity to get into shorting the market before the open. So we'll see about that, but this is what I think. I think pretty nasty things I play today. So it's going to be an interesting session, but next week is obviously going to be the game changer. And you can expect that if something happens during the weekend, I prefer to warn you just right now, just having a look at the NDX, okay, on a caching perspective. What we've been doing yesterday, even though this was a pretty decent pullback, remains a pullback. So this is nothing close to a bullish move. Even though we're making higher lows, everybody thinks we're going to break the highs, but until we haven't, it means that this is just a pullback, and we could very well fall apart tomorrow. So the thing is, just have a look at this. I'm just saying it. USD CNH, do you see something going wrong in here? Don't you see the red flag for the overweek session? I mean, the market will be closed for the weekend, and for some reason Chinese are moving the PCs. So expect something during the weekend, or at least expecting something during the weekend is not obviously irrational. I think we have highest ever level of risk. If you're remaining bullish on equities, don't be surprised if we're opening right here on Monday and selling off right after. Okay, so what we've been gaining yesterday can be erased during the weekend. We could open with a minus 3% gap on the NASDAQ, and nasty things will be at play, which means all those who've been buying Apple will reopen with a fucking down gap, and this is not going to be pretty. Okay, so play safe, and as I said, we're at highest level of risk ever, and the problem is that the risk factors are showing all red. We're selling junk bonds, we're ready to buy gold, the VIX is ready to explode and set itself above 15 level for quite an extended time. Really, buying right now is just nonsense. Only a bubble kind of trading can sustain buying the market right now. So I don't know what the market will do, but be really, really cautious in here. We're at the tipping point in either we're going to get into bubble or just triggering some extended amount of stop losses. All right. So bye guys. Sorry, taking questions. Market forecasts. And okay, not a lot of questions. Could you please break down your Alcon index in your next videos? Okay, I'm gonna get you. I'm gonna put the formula into the descriptions of that video, so you'll have it. Is there a reason for GBP USD went down despite the positive numbers of GDP? Yes, it's the fact that the dollar is just messing around and Wall Street's just doing the opposite of what it should do. It's like anytime we have something rational to do, Wall Street's doing the opposite just to fuck up those who are trying to get against Wall Street. So it's like Wall Street has its own plan against everything that is rational, against everything that's happening in the rest of the world. But I think at some point that this is not going to end well. Obviously, this is even going to end worse than expected, because as I said, someday China is going to make its move, and the day is going to happen, US are going to think, they've been thinking that they're going to win everything. I mean, I've been putting that tweet out there a few days ago saying, into Wall Street's perspective, into Wall Street's mind, what they're trying to sell you right now is that scenario that economic war, who gives a shit? We're going to win this one for sure. We're the richest guys on earth, so we dictate the rules. First, this is obviously wrong. This has never been the case and never will be again. So thinking like this is really short-sighted think of thinking, and this is nothing close to being a win-win situation, and more likely the one who thinks that way, it will be the biggest loser in the end. Second option, economic war. Currency war. Obviously we're going to win this one. We've got the dollar, we've got the strongest ever. No, playing that game, you're going to lose the international asset in dollars, the international exchanges, you're going to lose that big, which means probably a lot of weird things are about to happen in the next few weeks and days. for the dollar, and I think nasty things are at play because China really set things straight. They want to turn down the dollar as an international standard. They want to turn it down. They've been obviously playing ahead of this, and at some point it's going to happen, and there is nothing you will be able to do against that. And the first thing first, showing USD/CNH moving like that in the recent action suggests that something's at play, and you don't want to be playing in the wrong side of that game. So be really cautious. What you're having right now, Tesla, Apple, is just bullshit for stupid traders to try getting in. If it's not working, then nasty things will be down the road, because the rest of the assets are not buying. It's just 2 assets have been bought yesterday, crazy bots, for some reason, stupid reasons, to get to $1 trillion on Apple. Yes, good. That's the headline. Now what's next? Is it really deserving that price? Obviously no. Now Tesla and the 70% upward move, man, what the fuck? Instead of taking stop loss of the bears, this is all that has been done out there. We're nothing close to trading $400 with Tesla. That asset isn't even making profits. I mean, god damn it, how can you break up resistances not making profit? You're not breaking resistance upon promises. That's not how it works. So we'll see about that. Once again, short-term moves, short-sighted, it's not going to last long, and the money will be done on the opposite side in the end. It's just a matter of patience. So don't put too much leverage, be patient, have a mindset, and wait to get the precise timing to double down and fuck up those who've been buying. Bye guys.